Happy Monday, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, the market is waiting Powell's speech tomorrow, but interestingly enough, we went to a confirmed uptrend, which is interesting because that's a good thing. And it does look like, you know, the stocks, as weak as it sounds, we did have an index that moved up nicely. So at least for now, we're in a confirmed uptrend. That means that we know we can start putting back in. We can start moving back into the market. I definitely moved back into the market today. I was on Friday. I was pretty much out. I had I had really just very very little in the market, and basically now I'm basically back into the market somewhat, and just kind of looking to to move back into the market. Here's the situation when it comes to the condition of the market. We did move from a uptrend under pressure back to a confirmed uptrend, which is a good thing. And basically, what's going on here in the market is that we have some early gains. We had some early gains, and then we kind of give them up back at the end of the day. But there are some leaders out there that we'll go through. I kind of want to show you the stocks that I moved into today, and they're kind of, some of them are pretty pedestrian. Like I moved back into GE, for instance. GE has is showing pretty good numbers. They did spin off their healthcare unit, and so that may be showing kind of where they are. Now, I did get in here. I started basically here, and we went in basically on the 27th a few days ago. It's up from there about it was up 87.10. So we're still in it. We're still making a nice move here on General Electric. I don't know how long I'll be in it, but it has a strong checklist 7 out of 9, which gives it a 78% checklist. On the technicals, it's still buyable. It's still in the buy range as it comes off of that 21-day line. The 21-day line, it's basically 4.43% above the 21-day line at 83.37. So it is still actionable here. It is still actionable at this level. But this is definitely one that I have been buying as of late, and that is General Electric. There's another one. I'll show you what I have been buying. Currently, this is the overall market. Let's go over here. These are the stocks that I have moved in. I was in XLE and I was in on that was down today, but I did purchase again General Electric, and then Mobileye Global, that was down as well. ALGM down and Mobileye Global, but we did go into General Electric. General Electric looked pretty good today. Did buy that. So that kind of gives you sort of where I'm at, basically up on the XLE, down on I make shoes. They're a Swiss company. ALGM, of course, that's a chip company. ALGM, a lot of chips that are in the automotive sector on that one. Mobileye, which is the self-driving car company that was spun off from Intel. So that's an interesting one too. I'm in that as well. So that's kind of basically it. Let's look at the stock of the day here. The stock of the day today is a company, you might have heard of this. I'm not sure you have. It's called Splunk. The symbol on it, SPLK. It closed up $2.54 at 103.29. It's interesting because it came through a test, and it moved all the way down to the it came through a test and it moved all the way down, but now it is making a move higher. So very interesting stock, Splunk. It's basically a data analytics company, and they're right above there. Now there is a cup and handle base on that. Of course, if you follow this show at all, you'll know that we use the CANSLIM system of trading, which goes off of base patterns. There's a cup with handle pattern forming. The buy point on this one, 110.05. Now, currently it's at 103.29. So many times it's good to get in a little bit early. on the move. Now, here's the thing: I'm not recommending anything. Of course, this is just for educational purposes only. But in the past, these formations have been very predictive of upward moves. So we do have a move back into some of the data stocks, which is interesting. This one, Splunk, SPLK, and definitely is the stock of the day. So definitely something that you might want to take a look at if you're looking for something to possibly come into the market with in general. Also, let's take a look at how the index is closed. Basically, it was really kind of mixed day. It was up initially, and then we pulled back. And Powell's speech is going to be tomorrow, so that's probably one of the reasons. The Nasdaq was S&P was very, very flat, only up 0.07%, so almost nothing. The Dow Jones, interestingly enough, it pulled back earlier and then it moved back. It was up 0.12, almost nothing, flat. And then the Nasdaq was down basically 0.1. So kind of a flat day. We started out strong, but then it moved lower. So the market is still very, very jittery in terms of where it's at. So we've got to be cognizant of that. All right. Well, thank you very much. Let's take a look at some of the questions. Thank you very much. Charles is looking at ARRY. Let's see if we can find out something on ARRY. Yeah. So let's go there. ARRY. And of course, is Array Technologies. This is a chip company as well. So definitely, I think in the right section of the market. I definitely think the chip companies have been somewhat underinvested. We did come down to almost the 200-day moving average here. And now we have bounced, it looks like, on the 200-day. And we have bounced up second day up. Little off after hours. Let's kind of check it. Relative strength 95. That means it's in the top 5% of stocks currently, and we have some nice volume coming in. As you can take a look at the volume signature here down at the bottom of the page. If we look at the checklist, it's an 89% checklist. Basically, this is very, very good. The earnings per share was off a little bit, but everything else is a pass. It's near its all-time high. So this is not a bad place. Now, let's see if this is viable. It's a little extended here. 7.24% above the 21-day line. I typically like to buy it within 5% of that line. But it is looking, in terms of a technical trade here, it is looking like it may make some movement here tomorrow. I'm drawing the reversal line here, so you can definitely see that. So it definitely has moved from a downward trend to an upward trend, and that happened today. So here's a cautionary tale. Earnings are in 9 days. So if you do buy it at this price, $21.64, if you do buy it there, you're going to have to be careful, because if you're not up 10% in 9 days, you should sell it into strength, because as we know, the earnings are unpredictable and they can make the stock pull back. But I like the stock, Charles, and I think that it might work very, very well. So good call there. Thank you for bringing that forward. All right, let's take a look from TikTok, see if we have anything. If anybody is asking on any particular symbols on TikTok, let's go to Mikhail. Hey, hello, how are you? And let's look at CDAY from Charles again. Let's look at CDAY real quick. And I also want to go through some of the chip stocks as well, because I definitely think they're moving into and I also want to show you Volaris and see how that's doing. But CDAY, this is a software company as well. Software companies have been lagging as of late, and this one definitely is no exception. It came down below the 21-day line. It looks like it's reversed. Let's kind of look to see kind of what the checklist says here. 89, that's a very good checklist. The only problem is their sales are not advancing quickly enough, so I would be a little concerned there. Let's see how they did. They just came through earnings and they just reported the December quarter. Sales are up 19%, and profits are up 155%. So that's looking very good. Quarter for quarter, 88% funds in this one. So very little in terms of retail investors in this one, but a lot of funds are in 1187. number of funds in this one. So interesting. 97 PE ratio. Yeah, it looks very good. It looks very good. Probably would take a pass on it though, but I want to take a look to see if it is close enough to the 21-day line, possibly to buy it as a reversal on a reversal. So let's take a look there. Oh yeah, it's right on the 21-day line. Well, am I right? Yeah. Yeah, it's right on the 21-day line. Always a good place to buy. If the stock moves into an upward trend, the 21-day line is a very good place to buy it. Try to buy that possibly within 5% of that. It's less than 1% away from the 21-day line. That's not a bad entry point for this stock. So very interesting. I want to show you one that I definitely that I bought today. I may regret it. It's a little bit. Let's see if we're going to get it back. So we're having a little bit of issues. Yeah, Valeris. Yeah, let's take a look at Valeris, see how it looks. It was up today pretty strongly, up about $3.44. It came through nice earnings, and then it pulled back. This is very common. This is one of the reasons why it's important to, if you're coming into earnings, even if you're not up 10% or more, it's a good idea to sell it, wait for the earnings, and then buy it as it rebounds. That's exactly what happened here. It right before earnings, it went all the way up to 80, and then it collapsed basically 1, 2, 3 days down to about 65, and now it's climbing back up, and it's 75, 65. So strategically, when we are buying, it's a good idea not, unless you have a 10% cushion, not to hold through earnings. So but buying it after earnings is a good thing. You'll notice that the volume is starting to come in. You see the blue spike there, and that of course is the that of course is the line for the volume. So we do have lots of volume coming into this one. This is telling me, because this is a UK based company that does offshore in the Gulf of Mexico and Southeast Asia, we're starting to see reinvestment into the offshore oil. It's very interesting. We're seeing power in the tanking, the tankers. There's tanking has done very, very well, and also some of the offshore companies. So even though the price of oil is below $80, we're starting to see it move up once again. Of course, this is part of the situation because of the war that they're having. Much of that Russian oil that was flowing into Europe and Asia no longer is it, and so it's alternative areas of the world where the oil is coming from. A lot of it is coming from, of course, offshore, both in the North Sea area and also in Southeast Asia, near Indonesia. That is also a strong area for oil production. And of course, the Gulf of Mexico off the coast of Texas, where I am. So interesting thing coming in there. All right, Mikhail, GSAT, GSAT. Let's take a look at this one. And GSAT. Finally, Intelsat and other companies are starting to see some real competition. This is for Global Star. This is kind of interesting. This is sort of an emerging area, of course. Now, the biggest player, of course, in this area is Elon Musk's Starlink, but there are several other players in the international satellite direct to consumer business. One of them is of course Iridium, and this is another player, Global Star. Now this is a interesting. This basically goes to seaborne communication here. It's called Global Star. It is starting to see now. I don't quite know exactly how they access satellites with Global Star. I'm not that familiar with the company. It is a penny stock. Currently, it's trading at $1.20. I'm not really recommending penny stocks. Now, here's one of the things. Here's a cautionary tale right here. We have the death cross on this stock. Now, I'm not saying that the stock is going away because it just came through earnings, but you'll notice that the 50-day line moved below that 200-day line. So that is an issue here, and we want to be very careful on that, because with that means, of course, that that it is declining in terms of price. So we have to be kind of careful about this one. The checklist is only 44. I would skip this one for now. I would skip this one for now, and I would look to see if we could find something in the group that possibly is a better match than this one. I know that buying a stock like this is very tempting, because at $1.20, if it were to double to 240, boy, you'd make a lot of money there. But it's high risk because it's under $10. So typically, we don't like to buy stocks under $10, and part of the reason is it becomes very volatile, much more volatile below $10 in price. And that is the reason why many funds will not invest in a stock below $10. All right, we'll talk about Tesla here. This is Brad, B/RAD/16, Brad 16. Let's look at Tesla. This is the heartbreaker. I tell you, just when you think it's going good, it turns tail. But there's a reason for this, and I want to kind of mark up the chart here to show you why I think this is indeed the case with Tesla. The thing with Tesla is, and if we go, and this is really much more visible on the weekly chart. If we go back here to the weekly chart for Tesla, and we go right at 200, and we draw a line, you will see that if we go back to the what they call the overhead supply line, which is 18 months back, you can see that a lot of people bought Tesla above that 200-day line. So now that Tesla's come back to 200, every time we get up to 200, the people are selling into this. So this is the problem with Tesla right now. We have a ceiling really on the price of Tesla at about 200. So we want to be careful with this right now. The overhead supply has to get taken care of. Right now, I would not be buying Tesla, and I wouldn't be shorting it either, but I wouldn't be buying Tesla. Relative strength on this one's 22. That means that 78% of the market is doing better right now than Tesla price. So not, again, I love the stock, but I don't think it's time to be in it right now. I think you got to be super duper careful, and it's just the way it is. Charles is talking about Halliburton. This is a oil service company. There's two major oil service companies, Halliburton, of course, and Schlumberger. It's now called SLB. I think the reason they changed it is nobody could pronounce Schlumberger, but Schlumberger is the biggest. SLB is the biggest. This one is a significant company, Halliburton, in the oil service space. We're starting to see a lot of investment in oil service. You'll notice that I took a position in Valaris VLR today. Why? Because we're starting to see the cash move out of some of the tech areas into some of the oil service areas. That tends to be a very strong investment area right now. You'll notice this came off the 200-day line. We're right at the 50-day line. So definitely the interesting thing about Halliburton is it looks like we've made a reversal. This is interesting. What I'm going to do here is I'm going to set the alert on that line, that reversal line, so you can see it move above that reversal line. Currently, the relative strength of Halliburton is 80. That means that it's in the top 20%. And the checklist is excellent at 89%. So this is looking very, very strong. The last base pattern on this on Halliburton was a consolidation with a pivot at 43.42. Currently, we're at 38.80. So we're below that pivot. Not a bad place to consider coming into the stock. Thanks again, Charles, for a great suggestion here with Halliburton. What I'm going to do is I'm going to take a look, and I'm going to compare two stocks. One of them is Halliburton, of course, which we're looking at now. So, and I'm going to compare that with Schlumberger and Valaris. These are also in that group. So what I'm going to do is I'm going to go from the first of the year and see what we can find there. VAL, that's Valaris, that's the one I bought. And then SLB, this is Schlumberger. So this kind of gives you a look-see at the oil service sector. This is a really good sector to look for buys in right now. It's just getting a lot of investment, and I think that we're likely to see more investment as the year moves forward, because I do think that we're starting to get the price stability in the price of oil a little bit more than we have had, and I think it's if $80 oil happens, we're going to see a lot of investment in some of these oil service companies. But if you'll notice, Halliburton, if you were to invest in Halliburton at the first of the year, you'd be almost even. You'd be about 98 cents, so it's down a little bit. If you invested in Schlumberger SLB, you would have been up about 5%. But if you invested in Valaris, this is the one that I invested in, you would have been up about 15%. So you can see that in the oil service space, right now at least, and this is just right now because it's always about right now, it looks like Valaris is the top performer, at least for now. That could change, but there is investment coming into the oil service space, so that's something that we definitely have to see here. All right, okay, yeah, but here we go. Do you think that FTI will hit 17 by the end of April? Let's take a look at FTI and see if that is making sense. FTI. Got a little bit more time. Well, okay, it's formed a interesting Techno FMC designs manufacturers. I don't know this company for land and offshore. Okay, exploration. Yeah, again, this is in the oil and gas. This is in the this is in the space that is starting to seeing a lot of love, and that is the oil service space. So interesting. Well, interesting. Very, very interesting area. Okay, so let's jump on over to the stock. It's a $15 stock. And it's, you would think that if you looked at that, you would say, oh, that's a bull flag there. But I don't know if that really is. But it's a 98 relative strength. This means it's in the top 2% currently. Came through earnings. Let's take a look at the earnings. I always like to do not just the technical analysis, but the fundamental analysis. And of course, fundamental analysis is, what they teach you in school, like, what's the price to earnings ratio and that stuff. That's good for about 6 months out, but you want to look at the technicals. You want to look at the chart action to see in the short term what the stock is going to do. So with that in mind, the fundamental analysis, we did have this stock did report, and the sales were up 11%, but it does look like and I don't know why the earnings per share were down. So I can't figure this one out, but there are 488 funds in this one. Very nice. And it does have positive cash flow. So this is not, and the P/E ratio, it's NA. So basically what this is not, at least not this quarter, is not making a profit. I don't know why that's the case here, but that definitely is the case. The question is, will it be $17 at the end of April? Well, it's definitely looking like there is a trend. So if we were to look at the trend of the 21-day line, that's what I like to look at, that would give us a slope here. So probably, I think it's going to be about 1650. That's what I'm seeing here by the end of April, but you never can tell. So that's just based on just really a gross analysis of the trend line, the 21-day line for the trend. So not very scientific in terms of scientific in terms of a trend line there. But I would say that probably not. I probably will not be above $17 by the end. So you probably can't. It probably can't. Patesh is looking for Netflix. Let's see what kind of action we have on Netflix. We are seeing a little bit of strength finally in Netflix. It's funny because most of the FANG stocks, they have not been performing very well this year, or really last year, not very well. And it's definitely the case with Netflix. Now, would I short it here? Probably not, because Netflix is still above the 200-day line. It's still pretty strong, 88 relative strength. That means it's in the top 12%, but it's in this downward trend, and it did close below that 50-day line. So I wouldn't be buying it here. But if we get a breakdown, this might be a potential short. We don't think that's going to happen. I don't think that's going to happen right away, but the question is, are they going to be able to hold on to the subscriber base? This has been the problem with the recession. We have many people that are starting to go to the free services. So this is this is a kind of a bump in the road for Netflix. Many people are cutting. Not only are they cutting their cable, but they're cutting their paid services. So I'm not as bullish on Netflix as I was. I think that it's mainly moving. It's the services that have the advertising that are supported by advertising. They're probably going to do a little bit better. Look for some of the services like Crackle and stuff like that to pick up users from Netflix. So I'm not an investor in Netflix currently. I'm not short Netflix either. All right, let's look at T&K. This is TK Tankers. As I was saying, this is sort of a general trend in the market right now. We're seeing tremendous movement into the oil business in terms of moving it around the world. And TK Tankers is definitely in that business. Now, they were off a little bit today, but they're back up after hours. Can we buy it here? No, I wish we could. It's just too far extended. This has got a relative strength of 99, which means it's in the top 1% currently of stock. So very, very strong. I had this one last week. I did sell it. I made a little profit, not much on this one. 89 checklist on this one. Excellent checklist. Let's look at the technicals here. This is the problem. This is why we can't really buy it right here. I wish we could, because I would be buying this. 21-day line is 13% above the 21-day line. So what we have to do is we have to wait for TK Tankers to pull back to get closer to that 21-day line, and then when it does, then they will have a buy signal. But right now, we just gotta sit there with our hands in our pockets and not do anything. We're too far above the 21-day line to buy it here. It's too dangerous to buy it here. So I would wait on this one, but I would definitely watch this one. This is a powerful company. Basically, they provide shipping of crude oil, and that is a theme right now because, of course, the war in Ukraine has made it more difficult to ship oil via pipelines, and therefore there's added interest in shipping oil via tankers. So that's why we're seeing the bulk tankers, specifically the bulk tankers, being an area of the market that is showing a lot of strength right now. All right. Voya, Voya. I think this is it's like a financial. I see these guys' advertisements every now and again, so I don't know. Yeah, Voya Financial. There we go. What do I think about this one? 89 relative strength is very good, and it's nicely above. This is nicely stacked, 250, 21, 10. So those lines are all stacked nicely. Would I buy this here? I just don't really like any of the financials right now. We're going to get a collapse, unfortunately, in the auto financiers very shortly because of the interest rate situation. Yes, it's buyable here, but I would be super careful buying this one. 89 relative strength, though. Very good in the top 11%. So if you want to be in the financials, looks like a good one. It's sort of an insurance company. It's really a financial company. But it's life insurance. Here's the problem with life insurance. It's great to own a life insurance company. I wouldn't be a trader in a life insurance company. So that's kind of my take on that. All right. Well, let's see if we can. Hey, interesting. This is from Diego here. Thanks, Diego, for this is from TikTok. Diego is looking for CVX puts. This is, of course, puts on Chevron. I think that, I would be careful about doing that. But let's look at this. I actually own the XLE, which is the Energy Select Spider that is made up primarily of Chevron, CVX, and ExxonMobil, XOM. I own that one. And I don't think I would do a put on this one. I just don't. Now, I know that it did drop below that 200-day line. So, you say, wow, that's going to be a place that it might fail. Relative strength's only 47 here. What's going on. but I'd be really, really careful about shorting this one or doing puts, because I just think, and I know maybe I'm just weird here, but I think that we're going to have continued strength in the oil sector because, you know, it's just a fact. I mean, with this unfortunate war, which I wish would go away, um, the price of oil is going to, oil is the lifeblood of the world's economy, even though electric cars are coming. And maybe in my lifetime they will be dominant, but right now it's still oil. So I would be careful about shorting this one here. I think that this actually might be a good thing, something good to buy long. I know that sounds a little weird, but we're looking here at the weekly chart here, and it looks like it's come right down to that 40-week average, and then now it's starting to make its move up. So it did come through earnings recently. This is the last quarter of 2022. Their sales were up 17% and their profits were up 53%. So I just can't see doing puts on this one. I just don't think so. I think that you're better off buying this thing long. Why? Because, well, it's got a PE ratio of 9. It's expanding their sales, and this is a huge company too, by the way. The cash flow per share, $27.94. This is unbelievable if you compare it to other stocks. I mean, in the best you're going to get possibly in the big cap techs is going to be maybe a PE of 30 or 35. This is a 9 PE, and this is a company that's been around literally for 100 years. So I think that, I wouldn't short this one. As a matter of fact, I would be going long. Now, an easier way to go long here, instead of buying it for 166 a share, is to take a look at the XLE, which is the Energy Select Spider. This is very well poised as well. This basically owns Chevron and Exxon and other companies too. But you can see this one's already bounced, and you can see I put in my buy point there. This one's already bounced off that 200-day line, and it's moving up, and it's above the 10-day and the 21-day, and it's looking like it's going to move above that 50-day line. So at least for right now, the XLE is an upward trend. Currently, 87.25, and I think it's likely to come up to at least 94 before it reverses lower. We're kind of in this weird trading range where it's oscillating between the 200-day line and then the higher high. The higher high on the Energy Select Spider XLE is 94.21. So interesting stuff. All right, come on. The only thank you, man. Thank you for giving me the love here on the TikToks plus dividends. Okay, yeah, that's the thing. Again, I mean, I wish I could say that. I did 2 years ago. I made a lot of good money on Tesla, but right now I haven't been trading. I've been looking at the oil stocks. Why? Because they just are giving the dividends out. That's why. And so also let's compare the XLE. Let's compare 3 stocks. Let's CVX first. That's of course that's Chevron, and we're going to compare that. I'm going to compare that with from the first of the year. I'm just going to go from the first of the year, last 3 months. Let's see, and then I'm going to put in Exxon Mobil, and then I'm going to put in the XLE, which is both of them basically. So it gives you an idea. But here's what you can expect if you were to buy something like the XLE, which again, I'm not trying to give you advice, but this is the way it comes out from the first of the year. You'll notice that the underperformer currently is CVX. So if you started at the first year, you put $1 in on CVX stock, you'd be down about 5%. So that's probably not the greatest thing. If you were in the XLE, you'd be about even. And if you put it into Exxon Mobil stock, you would have been up about 4%. Now, again, you're not going to make double-digit gains on this one, but it's a good place to be because they have lots of dividends. All right. Well, thank you, everybody. Thanks for taking a look at my show. Oh, wait a minute. One more. And this is costs. This is an interesting one. I think this is Cosmos. This is a driller. If I'm not mistaken, this is a driller that drills primarily in Equatorial Guinea. Yeah, Cosmos Energy. This is actually a Dallas-based company, interestingly enough. Why? Because I know, because I worked for a while with Sunoco, and we shared a parking lot with this company. I wish been working at this company, because this company paid a lot more than where I was working. But anyways, you take the good with the bad. $7.76. This is essentially a penny stock. But the interesting thing about this one is that they have some major oil fields in Equatorial Guinea. Now, I know that you probably don't even know where that is, but that if you draw a line straight from across from Brazil, you're going to find where Equatorial Guinea is. They're involved in offshore production there. They've got some major oil and gas fields, and they are building it out. So they're basically in Mauritania, Morocco, Suriname, and then offshore of Guinea. So kind of unusual places. Very interesting company based here in Dallas, and they do a lot of offshore. They just came through earnings. Very interesting in that their profit was significant. Their sales were down a little bit, 2%, but their profits were up 77%. So very interesting, considering everything that's very interesting, considering things that are going on in the market right now. Let's just check the checklist here. Not as great. Check 67% on that one. On the technicals, is it buyable? Let's see if it is. Let's go to the daily chart to see if we can buy this one. And it does look like it possibly is. Oh, yeah, 1% above the 21-day line. Not a bad place to buy this one. And this is a $7 stock. So very strong international oil and gas E&P company. And, of course, they're in some really odd places, but these are new fields, Equatorial Guinea, Mauritius, and I believe, what's the other one? Okay, yeah, in Morocco and Suriname. So they're very heavy. Suriname, of course, is in South America, but they're heavy in the African continent and South American continent as well. There's a major oil field in Suriname that you probably have not heard of. Exxon has the field next to this one. So very, very interesting. Very interesting place on that. All right. Well, thank you, everybody. In order to keep the show on the air, I need you to do something for me. If you could please do this, and that is smash the like button. Smash that like button. It really helps us get out there on the algorithm. And so smash that like button. If you're not already a member of Dallas Trading Floor, super easy. Just go to www.dallastradingfloor.com and sign up for the free action trade alerts. And we'll be coming back to you tomorrow at 5. So until then, everybody, happy trading.